G'day guys, welcome to the Decrypting Crypto live stream. I am your host today, Matthew Batiri. Unfortunately, the boss Michael is away, so it'll be myself and Wasim taking you guys through all our hot topics for the day. So let's get stuck into the charts to start with. Alrighty, so I'm going to quickly zoom out so we can kind of see what's happening. I might actually bring up a different chart because that one's a little bit messy. But basically, crypto, or Bitcoin, I should say, has retraced back to its 2017 all-time high of $20,000. So if you've been keeping an eye on the charts, you can obviously see that since November 11th, basically, we have now tumbled all the way down to $20,000. Now, this is a chart that I actually shared on my personal profile on Facebook. And if you haven't yet added me as a friend, feel free to always add me as a friend. You can basically see that Bitcoin over the past 10 years that it's been in its existence, actually 2009 to be exact, but I guess more so 10 years of chart data, that basically we tend to go through ebbs and flows, and this is just part of the process. And I understand right now that a lot of people are probably frustrated, scared. They're probably looking at their account knowing that they've lost a lot of money. But I just want you to obviously know that this chart is always going up and to the right, which is fantastic to know. Most assets don't have such have had such great success, and a lot of these things that you can see right here is I showed how long. But if you had bought, for example, this year at the all-time high, or in previous all-time highs, how long it takes people for them to at least break even. So in the first iterance of Bitcoin, it took 611 days if you'd bought at $33 for you to break even. But if you held past that and you had strong hands, that if you held for another 270 days, you would have banked a nice little profit of 3,442%. The same iteration from when we hit $1,100, it took 1,131 days for people to break even. But if you stayed strong for another 330 days, you would have made 1,600%. And the same on this last one, where we went from the 2017 to this all-time high. That took 1,070 days. But if you held for another 361 days, you would have made a 243% return, much better than most banks. So I just want you guys to always know to zoom out when you're looking at price charts. I know that if you are like this and you're just focused on what's happened in the last 6 months, right? It is looking nasty, okay? Most people would have lost 70% if you bought at the all-time high, but just be patient, have strong hands. Now is probably, not financial advice, but if I had some Bitcoin, if I'm holding Bitcoin, which I am, now is not a great time to be selling. Because, we can go lower, but if we rebound from here, because previous iterations show that we don't break the previous all-time high. Now, there's always, history doesn't repeat, but it does rhyme. I just want you guys to zoom out and have faith in, obviously, blockchain and especially Bitcoin. All right, let's move right along. So this bad news that we've had over the sort of last 6 months with the economy and things going on across the world, we had the consumer price index of the US go to 8.6% in May, the highest level, obviously, this year. So cost of goods and services is skyrocketing. If you're watching the news, you're probably like, man, all I see is bad news, interest rates going up, CPI, food, lettuce, petrol. Things aren't looking good. But all I want you to know is markets and the economy goes through cycles, and unfortunately, people are going to do it really tough in the next 6 to 12 months, but there is always light at the end of the tunnel. All right, moving on. If you did watch the news, you would have seen that US Fed hikes their rates by 75 basis points. So Jerome Powell basically said that in the coming months, it's probably going to get a little bit worse. They're probably looking at doing another 50 or 75 basis points next month. And this created a lot of volatility in the stock market and the cryptoverse. So I actually got up at 4:30 a.m. the other day to actually watch the charts, and it's pretty crazy. I saw $1,000 swings both ways for Bitcoin in the matter of minutes, and that's a trader's dream. Lots of volatility, which is great. So raising interest rates makes borrowing money more expensive, which can obviously hurt individuals and businesses, but generally raising interest rates slows down the economy and discourages people from spending money. Homes cost more to buy for individuals, and borrowing money to finance business operations becomes more costly. But the Fed is planning, obviously, another interest rate hike in July, which can really slow down the economy and might cause the markets to fall down further. Alrighty, moving on. So if you've been keeping your ear to the floor, you probably heard that the US is trying to bring out a crypto bill. So we've seen some several positive developments, such as the introduction of a federal cryptocurrency bill that aims to bring regulatory clarity to cryptocurrencies as commodities under the Commodity Futures Trading Commission, CFTC, rather than the SEC, the Securities Exchange Commission. The SEC tends to be too tight and too tough on cryptocurrencies and regulations, whereas I think the CFTC will be a little bit more relaxed, and hopefully we get an ETF with Grayscale in the not too distant future. That'll be a massive influx in, big businesses that want to obviously invest a little bit of their balance sheet into cryptocurrencies. Alrighty, if you are a trader, you might know something that's called the hash ribbons indicator. So basically, it means there is minor capitulation. So all these red lines means there was time in Bitcoin's history when miners turn off their machines, right? Being a miner is a business. If the production cost of mining Bitcoin is more than what you're spending on electricity, then it's not really profitable. So people tend to turn off their miners. And the reason this occurs is because of the halving. So basically the rewards program of Bitcoin for when miners solve the equations, the amount of Bitcoin produced becomes less and less every 4 years. So right now at the current price point of $20,000, it's probably costing them more than $20,000 worth of electricity to create a Bitcoin. So a lot of miners are shutting off. Now this tends to be the start of the commencement of the end of the bear market. So basically it's telling me that we are close to the end of the bear market. We may not be right at the bottom, but we obviously could be quite slow. We could be quite near. We're closer to the end than we are the beginning of the bear market, which is great. So the hash ribbons indicator is where the 30 and 60-day moving average of the Bitcoin network's total hash rate crosses over. And basically, as I just said, miners feel like it's not really worth their while to be, forgot my word, but basically it's not worth them, mining Bitcoin. Geez, I'm struggling with my words today. Alrighty. Next on the map is Ethereum. So the Ethereum price is in the green and the red candles, and the orange line is Bitcoin's price. So basically what we've seen recently is that Ethereum has started to decouple from Bitcoin. And ideally you want Ethereum USD to fall proportionally to Bitcoin to strengthen the outlook as the sound monetary instrument that it is, because obviously Ethereum is used in a lot of protocols, NFTs, and a lot of things like that. So far, Ethereum has moved parallel with Bitcoin. However, the recent decoupling is one of the reasons why Ethereum could reach sub $1,000 in the coming weeks. And I think we got pretty close the other day. If I just change that to regular, we can see that Ethereum did come down to about $1,030, I believe, $1,015. So sustained weakness under 1,400 will strengthen the bearish outlook towards ETH and USD. It is the most compelling breakdown area in the price chart, as it's the former all-time high of the 2018 bull market. So I do have myself, I do have a bit of a target for Ethereum. I do believe at least this trend line that we can see right here, this could be hit quite soon, which is about $700 in Ethereum. So I've got a few buy orders down there. So if you're watching this and you want to know what some good levels are for Ethereum purchase, this could be obviously a level to look at. Next on is the inverted yield curve. So the US yield curves basically put, when these guys invert, it has usually signaled a recession. So in its history of being used as an indicator, it's only showed a false signal once. So on Monday, the 2-year Treasuries yielded more than the 10-year paper yield. So short-term yields, which are sensitive to interest rates, are rising with the rate hike expectations, whilst higher long-term rates reflect concern that the Fed will be unable to control inflation. So obviously, this is something that a lot of people are looking at. In the past, it showed that inverted yield curves create a recession. So that's obviously not something that we're looking forward to. But how bad things are looking right now, there are talks that we could go into a depression. Hopefully, we don't go that far because that will cause massive unemployment rates. Alrighty, moving on to the next news article. MicroStrategy's Michael Saylor said that he's going to hodl through the entire bear market. So despite the brutal downturn, the liquidation area for MicroStrategy, he says, is around 3,500. So I don't foresee Bitcoin going down that low. That would probably be a catastrophe in itself. But I think there are a lot of strong hands in the market. I think that $20,000 right now is a great buying opportunity. I think a lot of people are seeing that. And I think if we ever went down to $3,000, I think that basically that could be the end of cryptocurrency. But then again, Bitcoin has been dead, or news articles have been written about Bitcoin being dead over like 450 times, and it's managed to always come back from the dead, a bit like a phoenix. So I wouldn't be too worried about that. Lastly, in the news, PwC, so PricewaterhouseCoopers, believe that Bitcoin could reach $100,000 by the year end. Now, I think this is a little bit of hopium. We are at $20,000. That would mean a 5x in 6 months. I don't think Bitcoin has the ability to do that in this current economic climate with everything still going on, monkeypox, the war, and obviously the interest rates going up. So I think they're just putting in a bit of hopium. Maybe they have a lot of Bitcoin on their balance sheet. Maybe they overexpose themselves. I don't think someone like this would do something so silly, but they could be just putting hopium in the eyes of the retailer so they can pump their own bags. And obviously that's a good thing, because if it pumps up their bags, it's pumping up our bags. Alrighty. That's it for the news. Let's move on to some on-chain metrics. So what we can see here is the Bitcoin Fear and Greed Index. I know that yesterday we were at number 7. We are at 9 today, so we're still in the very fearful zone. We are actually at a very important area. This $20,000 area is really important, obviously being the all-time high. There are plenty of buy orders in the order books below that, but I think it's going to be difficult to break 20,000 just purely for the fact that it's just psychological number. It's a round number. It was the previous all-time high. There's a lot of buy orders around here because a lot of people believe that it is the bottom. We are at the 200 weekly moving average. So there's a lot of things supporting us in this area. But obviously we just need one case of bad news, like another Celsius or lunar, issue, and this could obviously take us down a little bit lower. Alrighty, we are still in Bitcoin season. It's not altcoin season. And what we will do throughout the stream after when Wasim jumps on, I'll actually drop a link where you guys can keep up to date with when we are obviously buying and getting back into the market, because obviously we know that there's a great buying opportunity just around the corner, and we'd like to keep you guys in the loop for when we're buying, because maybe you guys would be interested in also buying yourselves. Moving on to the Bitcoin rainbow chart, basically we can see here, basically a fire sale in blue, and we have just touched the blue. So this is not financial advice from the Blockchain Center, but this is the rainbow price chart, the logarithmic chart that Bitcoin does follow. It's been pretty accurate in the past, and obviously right now it's saying that it is a good time to obviously get into some Bitcoin. Looking at some of the whale wallets, we can see in the blue line here, which is wallets that have 1,000 to 10,000 Bitcoin. They had a little bit of an uptick when we sort of capitulated to that $20,000 this week. The 100 coins to 1,000 coins, they're still distributing their coins. You can see that the number of coins is still on a decline. So they're probably the guys that were selling, causing this sell pressure over the last week. But it looks like there was a little bit of uptick in the mega whales, probably exchanges seeing that it's a good time to buy. And then obviously just retail investors from 0 to 0.001 coins, they've just been on a steady upcline, just, I think dollar cost averaging and just buying bit by bit. Now, we've got a couple of indicators here that are probably showing that we're close to a bottom. So the amount of Bitcoins on exchanges is at an all-time low. What you tend to see as the market goes up, so the black line is the price of Bitcoin. When the market goes up, we tend to see the amount of Bitcoin on exchanges drop because people are buying, taking them off. And then when we start dropping, you tend to see people throw their Bitcoin back into the exchanges because they want to sell it. They're happy with their profits and so forth. So when we go up, the price is going down. When we go down in supply, the price is going up. So right now, I guess we're slightly going up, which kind of means that obviously the price is going down. But once we see this sort of flip over, then we're going to be, we don't have much more room to go. You know what I mean? So I think we're going to sort of have a bit of a reversal quite soon. The NUPL, so net unrealized profit, we are in the red zone. And if you look, once again, it's compared to the Bitcoin price chart in the black. Every time we're in the red, it's shown that it's been a great time to buy. So back here in 2012, we're in the red. We're at the low of the bear market. Right here, back in 2015.
It looks like we lost Matthew. So until he comes back, I'll take over.
Oh, am I back?
Oh,
I'm back.
You're back. Matthew's back.
Where did I leave off there?
You left where you talked about the NUPL indicator. We just started.
NUPL? Okay, good. All right, fantastic. Not too sure what happened there. Probably just dropped out.
I think you're dropping out again, mate.
We are? Okay, I'll let you take over. I'm going to reconnect.
All right, no problem. I can't share my screen, but anyway, so look, I will start with the Twitter highlights. This is the first time we have a glitch today, so always something new on the internet. You gotta love where technology works for us. Look, first of all, we're looking at Tyler Winklevoss, and what he said was, again, reiterating what Matt was saying. 2022 Bitcoin lows are the 2017 Bitcoin highs. So I know right now there's a lot of blood on the street. There's a lot of fear in the market. People don't know what's going on. But as we always say, when in doubt, in crypto, when in doubt, always zoom out. And when we realize that, the low that we're hitting right now is still the top of the market 5 years ago, it shows you how strong Bitcoin and cryptocurrencies are. I've said this in the past. Bitcoin was only $3,000 2 years ago, and today it's still over $20,000. So it's still long-term, if you are looking for long-term, we believe that, Bitcoin has a lot of potential. Moving on, we've got Michael Maloney tweet. The Michael Maloney tweet has a bit of a meme on there, and it shows the reality of what's happened over the past few years. That government started printing money in 2020. The more money they printed, the more inflation happened. They talk about the virus did it. They talk about it's transitory. Transitory. They talk about that inflation is good for you. They talk about that's the greedy corporations, and now they're blaming it on the war. But the reality is you can't print that much money without devaluing money. It's very, very basic economics, supply and demand. If there's too much supply, then the price of the product goes down. Same thing with money. When governments are printing money like there's no tomorrow, that's going to devalue money. And this is why we are here where we are. Now, if you are interested in Michael Maloney, he does have a book called The Hidden Secrets of Money, which is one of the most eye-opening books or series about the current financial system. Would highly recommend you look into that. Peter Schiff tweets. Peter Schiff tweeted that he goes, it took only a few days longer. So as we all know, Peter Schiff is a Bitcoin bear. So he's always talking negatively about Bitcoin. He's not a fan at all. He's a critic. He speaks about that Bitcoin went down. It was only $80 away from the $20,000 that he predicted, and Ethereum was only $20 away from the $1,000 that he predicted, showing a 30% decline. Now, it's always good to have a balanced view and look at both sides, those that are talking for and against Bitcoin. However, Peter Schiff has been proven wrong over and over again, especially with his predictions that Bitcoin will go to zero. Bitcoin has, as Matt said, has been announced dead over and over again, hundreds of times in the media, and it's always survived. It is here to stay. It's the hardest form of money. It is the best representation of money that we've seen in the history of mankind. All right, moving forward. The next one is Anthony Pompliano. Anthony Pompliano is a big Bitcoin maximalist, and he goes, today marks the biggest interest rate hike since the early 1990s by the Federal Reserve. They are anticipating no interest rate cuts until 2024. Now, that means we've got at least 2 more years of pain with interest. I remember back in the 1990s when I was still a child, my dad was buying a house, was buying his first house. The interest rates were like as high as 17, 18, 20%. Ridiculous at that time. And house prices were going up $4,000 or $5,000 a day. If this is an indication, you know, as Matt said, history doesn't repeat itself, but it does rhyme. So if this is an indication of what we're in, we are definitely in for some pain in the short-term future. And this is the perfect time for us to be dollar cost averaging in. So this is what we keep talking about, is always educate yourself, because, you know, the more you know, the more informed you are making better decisions. And I think the last tweet that we're going to look at today is Ben Armstrong's tweet, where he talks about the Celsius challenge. So as you guys have been seeing, you know, we had the Terra debacle a few weeks ago or a month ago, whatever it was now. Now we've got a big problem with Celsius almost getting liquidated. Look, Celsius, obviously, Ben Armstrong is not a fan of Celsius. Celsius, there is a company called Nextdoor looking at buying them out. There is a lot of news coming out from Celsius to what's happening. You know, we hope they get through what they're going through and they don't get liquidated, because it will mean a lot of problems for the crypto market. So that's it. Now let's move on to the adoption highlights. Or do you want to take over again, Matt?
Yeah, I was going to finish off what I had. Thanks, Wasim. I'll be right back with you. All right, guys. Now my internet is back up and running. I just want to complete a couple of these slides, these on-chain fundamentals, because they're super important. Because obviously, crypto is on the blockchain, so it tells us a lot of information about when possibly the market has bottomed. So this is the pure multiple. I have spoken about it before in previous live streams. And when we are in the green zone, this normally means that we are close to a bottom. Doesn't mean it is the bottom right now. I just want you to know that we are close to the bottom, being in the green zone. Moving on to the next one, we have the MVR Z-score. Once again, once we are in the green zone, we tend to be close to the market bottom. Right now, it shows that we are very close to the bottom. It seems that we need to get to the bottom section of the green band in order to be right at the bottom. So I think that's going to be in the next week or a few months. Lastly, the Bitcoin risk reserve also in the green zone, basically saying that now is a less risky time to invest in crypto. Once you are in the red zone, that's high risk. And then obviously when you're in the red, that's obviously signal the top of the market. Unfortunately, this market cycle, we did not reach there. I think because of a lot of economic factors, quantitative easing and things like that, all the money printing, I think everything got overinflated quite quickly. And we unfortunately moved, I think, way too quick in the market, and the smart market makers saw that and obviously decided to sell once people were FOMOing in. Also, because people were watching YouTube, hearing that Bitcoin was going to 100,000, 250,000. I even believed it in myself, the way how fast we were going up. I thought we were going to reach at least 100K quite easily, but we were all sort of fooled, and unfortunately now the market has reversed. A couple more slides. We can see that right now, if you are trading that and you are in a long, you are getting paid to be in a long, because the markets are negative, in the negative. Then we can also see that a lot of people must have sold Bitcoin, because we had a big uptick in stablecoin exchanges. So a lot of people must have been buying around that 20K, and then obviously we went lower, so they sold Bitcoin. So we've got a bit more stablecoin reserves, which just means we've got a lot of assets on the side getting ready to pump back into the market. Bit of sentiment news, obviously search volume on most of the large words, Ethereum, Coinbase, Uniswap, NFTs, has dramatically dropped, as we can see from these graphs. OpenSea Web3 has increased, but this just means that a lot of people, especially in the bear market, a lot of people are motivated to get in, because they kind of want to wait for the FOMO. They want to see the market sort of recover, and then they sort of get back into search terms like, where can I buy Bitcoin and stuff like that. Lastly, this is the excuse me, the Maya multiple. So when we are below this green line, it just shows that it's a great time to purchase Bitcoin. Right now, we're well below the green line. So this is, once again, just tells me that the market is close for a bit of a rebound. We should have maybe a bit of a relief rally in the short term. And then obviously we will get back into the bull run in the next 6 to 12 months. Alrighty, that is it in regards to the news highlights. I'm going to bring Wasim back in, and he can go into the adoption highlights. Over to you, Wasim.
Thank you, Matty. Look, adoption has been growing steadily. It's been going crazy, actually, according to, in my opinion. We're seeing more and more fashion brands. It seems like every single time I get on here, I'll talk about another fashion brand who's adopting cryptocurrencies in one way or another. This latest one is the French fashion brand Lacoste, who's now going into Web3 with their own NFT called Underwear. And I think the way they spell that is, can you scroll down a bit, Manny? I did look at that earlier. They call it, there it is. What do they call it? Let me have a look. They call it UNDW3, which is actually pronounced as underwater. Sorry, not underwear. Underwater is the name of the NFT. This is part of their marketing campaign to bring more and more people into their community. We're starting to see more and more of these innovative ideas where different businesses are using blockchain technologies to be able to grow their business and grow their community, and also offer new ways of doing things. So another one does bite the dust, and the dominoes are falling. Last week we had Farfetch. I think we also had another one before that. It seems like every single week or one or two big fashion brands are taking on crypto in one way or another. The next one is Brazilian congressman introduces bill to recognize Bitcoin as a form of payment. Now, they're not recognizing Bitcoin as legal tender yet, but they are recognizing cryptocurrencies as a store of value and a medium of exchange. This is great. This is another great example of the adoption of cryptocurrencies around the world. Brazil is a big company, big country, I should say, and they've been facing economic challenges with inflation back in 2020, as we were seeing. And now they're starting to see that more crypto assets can be used as a representation of value, and they should be used as a medium of exchange. The more of these things happen, the more countries start adopting these type of technologies. Even if they don't adopt Bitcoin as a legal tender yet, it's just another step forward to what we'll be talking about. Bitcoin, cryptocurrencies, blockchain technologies, Web 3.0 are going to disrupt almost every single part of the way that we do, the way that we live, the way that we do business, and so forth. The next one is Arizona State University intends to be part of the metaverse. So another one, we've spoken about blockchain technology disrupting education. There's multiple ways you can do that. One of the ways that they are going to do that is using blockchain technology to be able to give out degrees, but they're also using it for tickets, artworks, banners. They're also going to be using NFTs for like video highlights. They're going to be doing online lectures. They're going to also be looking at doing athletic carnivals, festivals, and whatnot, all in the metaverse. The world that we are moving into, guys, is going to be based on blockchain and cryptocurrencies and Web 3.0 technology. This is a great time to get involved. The market is down, and education is key. And that we're going to talk about an event that we're going to do that we're doing tomorrow. So if you haven't registered, we'll get that out to you guys so you can register. Now, moving on, the number of NFT trademark applications in the US tops 4,000 in 2022. If you want to just scroll down a little bit, Matt, there is a chart which shows that the same period last year was only like 363, and this one there, right there, mate. The same period last year, only 363 trademarks were filed in the US Patent and Trademarks Office. That's over an 11x increase in the number of NFT trademarks. And the highest day had something like 400, that's an average of 27 new NFT projects a day. And they had something like, I can't remember, it was something like 400 or 1,000 in one day back in March, 1,023 new NFT trademarks in one single day. Again, this is showing that NFT, we are just starting in this space. There's so many use cases that NFT can get into. And one of the things that we do here at Breakout Solutions is look into NFT projects. Moving on, and I think we've got one last one, which is a pretty big one. In 2024, the Olympic Games in Paris may introduce blockchain ticketing. Now, again, another use case of blockchain where it can make things better and fairer. So one of the biggest problems that France had recently with the soccer game, they had 30,000 English fans show up with fake or invalid tickets, which meant the game started 30 minutes late. Now, this can't happen with blockchain technology, and this is why France is looking at using blockchain technology for ticketing for the 2024 Olympic Games. Again, more and more use cases for blockchain. We've spoken about this. We speak about this in a lot of our education, whether it's government, whether it's financial systems, whether it's like now we look at sports, education, supply chains, music, art, etc. Blockchain technology has a space. Anywhere where there is a middleman, blockchain technology can come in and disrupt that. So well done on Paris for doing that and for their innovative thinking. Now, over to you, Maddie. Do you want to do the Breakout Solutions update and speak about the event we're doing tomorrow?
Yeah, guys. So we have an amazing event tomorrow. So discover the 5-step process to leverage your digital assets to create wealth like a super rich do without a lot of time or technical know-how. So basically, we're going to be showcasing a few things. We're going to be showcasing how a founder of Breakout Solutions, Michael, was able to 20x his portfolio from the previous bear market to obviously the all-time highs this year. We're going to obviously cover the things about our business, what makes us different to other businesses, the research team that we have behind us that is able to find those next coins that are going to 100x, 1000x in this next bull run. And we're also going to be talking about knowledge, education, and mindset, and why those three things are really important for most investors, and why a lot of investors tend to not be able to see the same returns as maybe their friends or professional traders or people like ourselves, because a lot of the mindset, especially right now when we're in a bear market, is quite negative. But really, those that have been in the space for a long time are actually seeing this as opportunity. Big guys like Warren Buffett, these types of individuals, they made their bread and butter through recessions, bear markets, and so forth. And it's just that mindset that they have to be investing when everyone else is panicking in order to get ready to ride the next bull run. Anything else in that presentation that I forgot to mention?
I think you've covered quite a good summary of what we're going to go through, guys. And look, what I've got to say is, just to reiterate what Michael said, what Maddie said is, during this time, during the bull market, everyone's so busy trying to find the right token to get involved in. We don't usually have a lot of time for education. But now that things are slow and the market is moving slowly, this is the best time to educate yourself. Now, I always tell the story of Think and Grow Rich, and I always love to refer back to this book. I've read it multiple times since the first time I got into entrepreneurship. And what I learned in this book is the people that made it during the 1920s, Great Depression, etc., were people that found opportunities and took action on them. And what we have now, we have very, very similar conditions in the market. We're coming out of a pandemic. They had the 1918 Spanish flu pandemic. We had the 2020 pandemic. They had global downturn in the economy. We're seeing that right now. And they had an industrial revolution, and we're going through a financial revolution right now. So when you look at the similarities, again, history doesn't repeat itself, but it rhymes. Similar conditions. A lot of people did not make it, and some people did. Now the question is, where do you want to be? Do you want to be part of those people that are taking on the opportunities that are available to us today and being able to maximize on those? Or do you want to be part of those people that are going to look back in 2-3 years' time and say, man, I wish I bought back in 2022? That decision is yours and yours alone. And the only way you can make an informed decision is by educating yourself. So please come tomorrow, listen to what I've got to say. We've got 5 simple steps that you can follow. One of them is mindset, education. There's a whole bunch of things that Michael's going to reveal to you guys that's going to show you how you can maximize what we're going through right now and be able to position yourself for a much, much brighter future. So please go onto that link, breakoutnow.co/event, and we would love to see you tomorrow. Even if you can't make it, register for the event. We'll send you out a replay. You can watch it afterwards.
Awesome. Thanks, Wasim. And for those watching, I've just dropped the link in the comment section of this video. So please make sure you utilize that. And we'll see you guys tomorrow, 10 a.m. Australian Eastern Standard Time. That's it from us.
Yeah.
Bye, guys.